Welcome to the briefing on the Indian Renewable Energy Development Agency's standalone results for the June 2025 quarter of financial year 26. In this session, we'll explore the top-line growth, profitability metrics, and what investors should focus on today. Let's start with net sales, which reached a record 1948 crore, up by 28.94% from 1510 crore in June 2024, thanks to higher project commissioning and tariff escalations in our renewable energy portfolio. However, despite this strong growth, our standalone net profit saw a sharp decline. Profit after tax for June 2025 was 247 crore, down 35.71% from 384 crore last year due to increased finance costs and higher provisioning. On the earnings before interest, taxes, depreciation, and amortization reported 1533 crore for the quarter, a 5.04% increase year-on-year from 1459.29 crore, showcasing operational resilience despite the pressure from interest expenses. Earnings per share fell to 0.91 from 1.43 in June 2024, marking the lowest EPS in last 5 quarters, which indicating pressure on shareholder returns amid rising costs. Looking at the expenses, employee costs rose slightly to 21.18 crore, depreciation increased to 9.94 crore, and provisions surged to 362.61 crore, all contributing to a reduced profit before tax of 304.64 crore. After accounting for a tax outgo of 57.96 crore, we achieved a profit after tax of 246.68 crore, with the effective tax rate rising sequentially due to deferred tax movements. Sequentially, total income increased modestly from 1904.5 crore in March 2025, but higher interest costs of 1218.27 crore compared to 974.93 crore last year squeezed our funds from operations. On the stock market, Indian Renew shares closed at 169.64 on July 9, 2025. As investors reacted to the mixed earnings, celebrating sales growth but cautious about profit contraction. In conclusion, while we set a new sales benchmark in the June quarter, rising costs and finance charges have impacted profitability. Keep an eye on interest rates, project execution, and tax trends as we move into FY26. Hit the bell icon, like and share. Subscribe for more news update.